Good morning, students. Welcome to the subject of finance management. We are dealing with unit number 4, that is management of receivables. Right? In the previous session, we have checked out that when the what is the introduction rather to the management of receivables, right? Why it is so important? See, every unit cannot sell the goods on cash every time. So selling goods on credit is essential for any economic system in the modern business, right? So if the goods are sold on cash, there is no question of receivables, and you don't actually, there is no outstanding receivables that is to be received by the company when the cash is to be, when there is a cash transaction. So it arises only when there is, and say the credit sales done, right? Many a times what happens is that these method is to be taken up, that means the selling of the goods on credit is to be taken up by the business so as to promote the sales, right? So how can you promote the sales? If your competitor is providing the goods on cash only, and if you are giving a benefit of providing the goods or maybe selling the goods on credit, then definitely the number of customers may increase. This may provide the facility to the customers as well as to the business, because with the help of credit sales, the customers get the time period to make the payments. On the other hand, we can make, or we can as a business we can ascertain an amount of sales that is being done, right? So it is the amount that is due from the customers is known as the account receivables, and I repeat, it arises only when there is credit system of the sales, right? So a sale is realized as and when the invoice is generated. We all know this, right? Invoice means the bill is generated, but usually a time period is provided to the customers. As I said, that customer is given the time period, that okay, a month, maybe 4 weeks, 3 weeks, 2 weeks, whatever the credit policy of the firm may be, and that time period, after that time period, the amount due from the customer is received. So this practice of conducting the business on a credit terms gives rise to the account receivable in the financial statements. This credit facility is laid down so as to ensure that there is smooth flow of working capital into the business, right? But there are also the complexities involved in the accounts receivable, that is its management, the process of recording in the financial system, what will be the credit period. There are so many new aspects or issues that are related. But even though account receivable is always a very important aspect of working capital as far as any business is concerned. Why so? Because in the modern era, as we have seen, it is not possible to continue the business only through selling the goods on cash. So it is very important to have the credit facility given to the customers for the sale of the goods, and that will definitely give rise to account receivable, because account receivable is that part of the money which is stuck up with the customers till they make the payments of the credit facility that they have taken up, right? So it is very important term. I am refreshing it for a time so that you can just relate it with whatever we do it today. So the word receivable stands for the amount of the payment that is not received from the customers. This means that the company has extended the credit facility to their customers, and account receivable is that money of a business that has a right to receive after a certain period of time. Right now you are receiving, that means it's a cash transaction. You sell off the goods, you generate the bills or invoice, and it is created, and you get the cash in the cash box. Then there is no question of account receivable. But when the credit facility is provided by the business to the customers, then definitely the account receivable will rise up, right? So account receivable is the money that a business has a right to receive after a period of time, and when the business has sold off the goods or services on the credit, only then the question of account receivable comes to the business. So જે business credit policy ઉપર નથી ચાલતો, credit sales નથી કરતો, ત્યાં account receivable generate થતું નથી, right? So why this the next portion comes up is why it is so important to have the account receivable. That we will see it in the objective portion, that the business usually have invested money in selling the products and delivering of the goods. After selling the goods, the inventories reduces, and in turn the businesses need an asset to balance this and the financial statement, right? So either that asset are cash in hand or the receivables. So cash in hand you will receive it after the cash sales is being done, right? And the account receivable will occur when there is the selling done on the credit basis. So as account receivable forms a major part of the organization's assets, it leads to the generation of cash in future, in cash inflow in the books of organization, but in future. That is why it is receivable. અત્યારે receive નથી થયું પણ receivable છે. Alright, so account receivable can be recorded in the financial statements that has been shown here, that it can be received or it can be recorded in many different ways, though that is not very crucial part of our syllabus, but as of now we will just carry out once again so that we can just refresh it કે account receivable છે એ કેવી રીતે financial statement માં record થાય છે, right? So we are following the flow of the PDF that is opened before you. So usually the business expects to receive the money in future, so it is to be added to the asset side in the financial statement of the business, that we have discussed yesterday also, because the money is receivable from in the future, so it becomes more or less the asset of the company, and that is why it is noted on the asset side. The next is accurate record keeping of these money that is receivable, that or account receivable in the books of accounts are required to avoid any default in the payment due. Now if you have made the credit sales, you have already conducted the credit sales, but in any case that there is a kind of mistake, or you have missed or you have skipped to put it up in the books of accounts, then it may create the problems as far as the payment due is concerned, right? So it is very important. So few pointers connected to the recording of these account receivables have been shown here, that how it can be done in the best possible manner, and once you do it in the books of accounts, you can understand, or you will come to know the exact amount of the account receivable, which becomes more or less the asset of the company for the future. So establishing the practice of credit transaction, number 1, this is the pointer number 1, that means the business may establish a practice of providing a credit policy to its buyers. This credit can be extended for a specified period, and any default in this payment usually attracts the penalty, right? This practice of credit facility requires two parties to come to an agreement. One is the provider of the facility, that means the seller of the goods, and the other one is the paying ability of the customers, right? Before agreeing to any terms and conditions, that means the term has to be fixed, the conditions have to be fixed, and then the credit transaction is to be mentioned. Suppose if you are providing the, as a business you are providing the credit facility to the customers, then the time period has to be fixed, that okay, if you are buying the goods on the 1st of the month, then you have to make the payments latest by 31st or end of the month. This is the credit policy, and that is to be agreed by both the parties, that means the seller as well as the buyer, right? So establishing the practice, this is a way of maintaining the account receivable. So credit transactions are to be established, right? Next comes up is generating the invoices for the customers. Invoice means bill. Next way, how we can make the account receivable or how we can note, આપણે કેવી રીતે સાચવી શકીએ account receivable. So the business are required to generate the invoices of the sales made or maybe the services delivered. The invoice should have the details of the cost of the goods and services sold to the customers. This generating of the invoice ensures the recording of the credit card transactions clearly in the accounts of the business. If the invoice is generated, that means it will be a reminder to the business that this is the amount which is to be, this is due, and we have to get this amount by the end of this particular time period. So further, a copy of invoice is also given to the customer, so it is also a reminder to them that this amount of the credit sales is to be paid by them by the due period, right? So generating in invoice is also a way of maintaining the account receivable. Next comes up is tracking the payment received and the payment that is due to be received. An accountant is always required to track the payment received or due from the customers. Only then the exact amount of the account receivable will be known to the business. So the details of the method of payment and the date of receiving the payment have to be recorded in the customer's ledger account. You have to maintain it Only then you will come to know that so and so customer has to pay the amount of this much by this particular time period. This ensures the correctness of accounting of the credit amount, and the business shall also generate timely reminders for the due pending to the customers. We have often seen that when we are using the credit cards, right, then the credit cards are what? It's a kind of facility that is provided to us, right, that we can make the payments later on. So when we have to make the payments of the credit card, then the banks or the institute often gives us the reminder that this much amount is to be paid by you, or which facility our card or our banking system has given to you. That means you have to maintain that, the banks maintain it, as well as the business also generates the timely reminders for the due pending from the customer, so that you ultimately come to know that okay, from a customer this much was the pending amount, these you have already received, and this much amount of the credit sales is yet to be received by the business from the customers, right? So this is how we can maintain the account receivable, by tracking the payments and by tracking that what amount is yet not paid or is due. The fourth point comes up, or the fourth pointer is accounting for the account receivable. Now the accountant or the person responsible for taking the due care of the account receivables must record all the due dates of the payments to be received. Naturally, only then the correct liquid situation or correct liquidity of the firm will be known by the end of the time, right? So the timely and the prompt recording of the account receivable leads the receiving of the payments on time from the customers, and once the account receivable is recorded and the payment is received, the account for the said party can be settled for the good, right? That means once you have made the credit sales, when this account receivable comes into existence, when you make the credit sales, right, means you are creating the invoice. One invoice is kept with the business, the other copy goes to the customers. So you have to maintain, as the accountant of the business, you have to maintain the due dates, that okay, if so and so customer has bought the goods, or to him he has sold the goods on this date and his payment is due on this date, and the amount is this much. If this much recording is not done, or if this data is not recorded by the accountant, it becomes very difficult at the end to find out that which customer has got which due payment on or by which date, right? So it is very crucial that we must have the proper accounting maintained, or proper dates maintained of the account receivable. So these are some kind of pointers that we have seen that helps us to record the account receivable in the financial statement. That means you have to establish the credit facility system or credit transactions that you do. In the next case, you have to generate the invoice and their copies, one which is with the customer and the other one lying with the business. And you have to, in the third case, how you can make the accounting easy, by tracking the payments and the payment received and the payment due from the customers. And the last one is accounting for the accounting receivables. That means you maintain the proper accounting system for the account receivables. Only then the amount due or the amount of the credit sales can be known, and how far these will be received in the future can be known by the business, right? So here we are ending up with these pointers which helps us to maintain the account receivable. We are going for the next one, that is what is account receivable management. That means account receivable કોને કહેવાય એ આપણે જોઈ લીધું છે. હવે management કોને કહેવાય, that we are trying to see it here. Now account receivable management is the process. What type of process? Of ensuring that the customers pay their dues on time. That means a account receivable management એ એવું આખું process છે કે જેના દ્વારા we can ensure, it's a process of ensuring that customers pay their dues on time, on the timely basis, right? Next, it helps the business to prevent themselves from running out of working capital at any point of time, because you maintain the account receivable, or if only if the AR management is done in the organization, you will completely come to know that when the business is running out of the working capital, or maybe when it will be having the money on hand, right? So that position can be known. For that purpose also account receivable management should be taken up. Next is it also prevents overdue payment or non-payment of the pending amount of the customers, and it builds the business financial and liquidity position. What happens with proper account receivable management? That we can prevent the overdue payments, right? That means if there is no payment from the customers, we can make the reminder calls, or whatever the policy that has been adopted for reminding them, that can be taken up. Overdue payments can be received, right? And this helps to have what? It helps to build the business financial and liquidity position. So if you want to have the strong business as far as the financial position is concerned, and at the same time you are having the credit sales policy, then account receivable management is a must function, or is a must duty of any organization or business. Right? Next comes up is a good receivable management contributes to the profitability by reducing the risk of any bad debts. Naturally, એ કોઈ પણ receivable management જો એક organization કે businessમાં થતું હોય તો એની profitability વધારવામાં ફાયદો થાય છે. At the same time, you are reducing the risk because you are maintaining the account receivable properly. You are maintaining all the data, and you are reminding the customers for the payment dues from time to time, and whatever the actions are to be taken up, they are taken up by the management, or maybe the managers, account managers. So what happens is there is less risk of bad debts. Bad debts means totally if the amount you are not going to receive, that amount will decrease because you have proper account receivable management done, with which you can remind the customers from time to time about their payments, and you can manage it properly. Right? Management is not only about reminding the customers and collecting the money on time, but it also involves identifying the reason for such delays and finding a solution to those issues. See, I told you that account receivable management is not just reminding the customer and giving them the phone calls about collecting the money, but it also involves that what is the reason why the customer is unable to make the payments, or is there any fault, or why there are so many delays in his payment, and then accordingly we can find out the solution for them, or we can find out the solution for such kind of issues. So it is not only the remedial process, but it is also a kind of preventive process, with which whatever the past experiences may be, on the basis of that we can make the changes in our credit policy, and likewise we can make the business liquidity strong and safe. Now, what is the process involved in account receivable management? If you are taking up with account receivable management, then what is the process behind it, or what it takes to manage this account receivable? As you can see it, there are the stages that has been given. An account receivable process involves the following. That is number 1, credit rating, that is the paying ability of the customers. We find out the paying ability, and only then we decide on the credit sales, right? Next, continuously monitoring any risk of non-payment or delays. That means if any kind of delays are there, unwanted delays are there, any risk of non-payment is there, that is detected, and accordingly the steps are taken. Customer relations should be maintained, and thus a proper and cordial relationship with the customer if maintained, then it will reduce the amount of bad debts or the risk of bad debts. Next, addressing the complaints of the customers. Many a times the complaints are raised by the customer, and those grievances have to be solved, right? And that can be done so that it helps to make the customers make the payment on a proper due date, and timely payments from the customers can be received. Next, after receiving the payment, the balance is in the particular account receivable should be reduced. That means you should make the changes in the books of accounts, so that we can come to know that the actual payment received is this much and the due payment is this much. So preventing any bad debts of the receivables outstanding during a particular period of time, and at the end what we can do is we can prevent any kind of bad debts that may be there, or that may have raised, or there are chances of that being there in the transaction, that can be reduced. And the outstanding amount, it is a check through which the outstanding amount can be received in a particular period of time. So this is how what we have done in today's session is we have taken up with every aspect of account receivable in short, like how it is to be maintained, what is the process, right, what is the account receivable management, in fact how is the account receivable recorded in the financial account, why it is so important, and likewise we have tried to take an overview of the receivables, account receivable, and how the account receivable management is taken up in the organization. That is what we have checked in today's session, right. In the previous session I had already taken up with few of the points, but I thought let me just take it one more time with you so that you can get the clear cut idea of the account receivable and the management concept of it. Tomorrow or in the next session when we come up, then we will be taking up with a few more aspects of the receivables, like objectives of the receivables and the cost associated with it. So when we meet next, we'll be taking up with these two particular topics. For now, it's a goodbye from my side. Take care of yourselves and be ready with the concept of account receivables when we meet next. Thank you. Goodbye and take care of yourselves.